Filming at the cottage today because we bought this property with a private mortgage. When I first found this property, I knew I couldn't qualify for a bank mortgage because I was newly self-employed. However, what I also knew is that it's the perfect cottage for my family. But we closed this property with a private mortgage at 8% interest rate for 6 months. As soon as my business had 6 months of history making positive cash flow, I refinanced myself into a bank mortgage and lowered my interest rate by 5%. After watching this video, you'll have a good idea when does it make sense to use a private mortgage. First of all, what is a private mortgage and when do you need it? It's a very sunny day today, so let me put on my sunglasses. So private mortgages are usually short-term solutions to help you improve finances. Given the increasingly strict qualification requirements, many borrowers are turned away by their own banks. A private mortgage is a mortgage offered by non-bank lenders. Banks are federally regulated. Unlike banks, private mortgage lenders have more flexibility on income and credit. They look at the whole financial situation of the borrower and see if that makes sense. They really focus on the quality of the property, such as location, interior, the purchase price. With more flexible qualification requirements, the risk to lenders is higher, and therefore the rate for private mortgage is also higher than a bank mortgage. The most popular private mortgage is a 1-year term with option to renew at the end of the term. Most of private mortgages are interest only. It means you only need to pay the interest portion of your mortgage each month. As a result, the monthly payment on a private mortgage is often comparable or even less than a bank mortgage. And private mortgages offer opportunities for Canadians who do not fit into the bank's traditional mortgage box to own a home or take out home equity. Not all private mortgages are created equal. To get a good deal on your private mortgage and use it for your benefit, you need to find a lender who is transparent with low fees and offer products that works for you. When does it make sense to get a private mortgage? So let's take a look at 7 reasons why people turn to private mortgage lenders for a mortgage. So number 1 is if you're self-employed. So many business owners like myself, or for example, a lot of contractors, they choose to take a very little portion of their income out of their company for tax reasons or just because they want to keep more money in the company. Banks only qualify for a borrower based on what they report on their tax returns, maybe with a very small gross up, versus private lenders. They look at the holistic picture to see cash flow, to look at the quality of the property. So they can approve you even if a bank declines. Number 2, if you're a real estate investor. But nowadays, banks are really strict on rental properties. The number of properties you can buy are very limited. Even if your rental properties are making extra money, cash flow positive, banks usually discount your rental income and add extra buffer to the expenses to be conservative. If your rental properties are cash flow negative, you will need to qualify the extra money using your employment income. That's why many real estate investors have capital, but they don't have enough income to qualify for a bank loan. Those investors often use private mortgages to expand their portfolio. For real estate investors, there are only 2 strategies. The first one is buy and flip. It's a very short term. They only need the money for 6 months or maximum a year. This is when spending all that time and effort getting a bank mortgage doesn't make sense, and then you have to break it. There's breakage costs. Versus then you can get a 6-month open term private mortgage, right? Then the other strategy is the BRRRR strategy: buy, renovate, rent, and refinance. So for that, when you're buying, when you find a good opportunity that's under market value, it takes a long time to qualify for a bank mortgage. That's why they often close the property using a private mortgage, renovate. When they refinance into a bank mortgage. The third reason is if you need to consolidate higher interest credit card debt or repair your credit. Mortgage interest rates in Ontario are a lot lower than credit card or other personal loans. If you own your home and have at least 20% equity in your home, you can use a private mortgage to consolidate higher interest rate debt, such as a credit card debt or car loan or a personal unsecured loan. Many of our borrowers can lower their monthly payment by more than 50% by using a private mortgage. Lower monthly payment means Lower utilization on your other credit lines means better credit. It can help you improve your credit score significantly. Number 4, private mortgages can also be used to purchase a property for people who are new to Canada or non-residents. Banks have very complicated and lengthy mortgage processes for newcomers to Canada or non-residents, especially if you don't have a job yet. We saw many clients got declined last minute and have to miss their closing date. The private mortgage is the fastest way to get approved if you're new to Canada with little or no credit history, or if you're earning your income from a foreign country. Number 5, many people also use private mortgage for home renovation. A private mortgage is a perfect choice if you need funds to renovate but cannot get additional refinance from the bank. Getting a private loan is way cheaper than running up the balance on your credit card. Number 6, a bridge loan. A bridge loan is a short-term solution when you are in between properties. For example, if you have already bought one property and haven't sold your existing home yet, you may need a bridge loan to finance your new home while waiting for your existing home to sell. Banks only provide bridge loans if the purchase and sale are within 90 days and if you have a firm sold offer. We all know selling a property is all about timing, and many people use a private mortgage as a bridge loan to wait for the right time to sell. Life event. Life happens, whether it's unexpected illness in the family, pursuit of higher education, or breakup with your significant other. Sometimes you just need a little bit of extra help with your finances to help you get through life. A common example of that is during a divorce, when one spouse needs to buy out the other. Sometimes people thought they had to sell their homes to do that. Not necessarily. When you have to buy out the other spouse, now is when you need to qualify for a mortgage on your own salary instead of the double income. This is when it gets harder to get qualified from a bank. However, as long as you have home equity, you can get a private mortgage, help you get everything settled and move on with your life.